What is up, everybody? Zach is back on another episode of Journey to $0. And you guys know what time it is. It is time to make so much money. Oh man, we got some good news, guys. We got some good news. Unemployment rate dips to 6.2% as U.S. economy adds 379,000 jobs in January. Hello. How's everybody doing? Can you hear me? Is anybody there? We've gotten good news. But I also want to rant. I have some things to say. I have a video I want to show you guys. Really want to say some things, but hey, wait for some more people to join us first. I can't post on Twitter. I'm blocked. Jeez, they blocked my Twitter. 12 hours. The flaming motorcycle. I've got some things to say. Did you guys check out the latest video? I changed up the style. I went out to the Neo store, did a test drive. You know, let me know if you like it. I think you guys might like it. Man, every time I start, where's my stream manager? I need my stream manager. Every time I start a new live stream, then this browser thing doesn't work. I don't know why. It's weird. I don't know why. Alright, I probably should set this up before before I start. Hey, I'm glad that some of you guys watched it, but I was so late getting it out. Most of you guys were either staying up way too late and watching it, or or already asleep for a long time. Zach, while we are waiting, have you heard anything about Solo that is driving down the price other than the whole damn market being down? I'm scared to keep adding. Look, guys. If you cannot see yourself holding the stock for 5, 10, or 20 years, now is not the time to be holding these stocks. You need to cut everything. This is just my opinion. What I did. I cut everything except for the ones that I'm holding for the next 10, 20 years. Forget it all. Drop it all. We're going to be sideways at the best. And we're going to lose money on the options. So no matter what it is, I might go ahead and cut it. Except for the positions that you see yourself in for the long term. I mean, it's hard to do, but hey, you can wait it out. If you're just adding shares on Solo and you see yourself holding this company for a long time, then yeah, go ahead. You can keep going. That's just my opinion, and that's what I did yesterday. Trying to figure out my browser. I want to show you guys something. Cool. Seems to be about it, huh? wanted to watch this video with you guys, and then I want to rant. Something like that, right? But anyways, would love to see a lead test drive. Yeah, me too. I don't even know if they have stores. I'll have to go look for the store. Search on the Chinese Yelp. Yeah. I mean, it's crazy what's going on. I mean, it literally makes sense, but it doesn't make any sense because think about it. These, yeah, sure, the bond yields are going up, like blah blah blah. It's a total overreaction. Totally, this is the bond yields do go up. Look at this. We did a little technical analysis on this 10-year treasury. Look, it's not a big deal. Things go up, things go down. Mostly it's going down. Mostly it's going down, but you know, so we're in a period of going up right now, so it is what it is. But seriously though, I think it's a total overreaction. We're right about back to late February at the crash. We're right about back to those levels, so could be good. So my opinion is, can you guys even see this? Let me double check. My opinion is, look at that. I mean, we're right there. We're right there. We're back to pre-crash. But hey, take it with a grain of salt. It could go bounce on off of this resistance because it seems like it does do that sometimes. But then again, it seems like it does do this too. So I would say potentially yellow resistance right at about 1.7%, or just go right up to 2 if things are really shot. But I mean, there's some sort of possible resistance at a lower level here. It's hitting every single one. Here, 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 and here. And then it probably would hit even more if I kept pulling that line out, but whatever. But I mean, at the very top though, you know, there are some here. So I would say we're possibly done right now with bond yields rising because it's back to pre-COVID. Well, it could go up a little bit more. Or maybe it'll go up a little bit more, but people will just stop absolutely losing their cool because it is back to pre-COVID. Or it might go up to this resistance or this resistance. That's the best technical analysis that I can do. But I think maximum probably 2%, but don't hold your breath. Just my opinion. Anyways. Yes, good morning, Darth Molly. And then, let's see what else. So, if you guys are not comfortable holding these stocks for a long time, then I would cut it and put the money into something that you are comfortable holding a long time. That's what I've done. I've basically cut every single one of my short-term positions, which sucks, but hey, that's just it's just how it is right now. And I dollar cost averaged into more the ARKs and also bought the financial sector just to kind of, because that one seems to be going down less these days. Disney is a good one. I'd buy it for sure. It's a long-term play. It is on the up and up with Disney Plus, Star Wars, and everything. Absolutely. Yeah, I don't know if it's going to be red or green. Obviously, nobody knows. If somebody says they know, then don't listen to them. But I mean, basically, I think the yields will keep going up. Probably 1.7%, 1.72, 1.73%. And then I would consider something else, but Um, Nasdaq seems to be up a little bit. The SOX is up 1%. So there's that. Anyways, just keep. Oh man, that would be cool if that went up, but oh my god, we're gonna make so much money later though. That's the thing. It's been tough and sometimes the best choice. Yep. Well, it seems like the job report is good. It says unemployment rate, and this is Marketwatch. Yeah, let me do that. Marketwatch. Do the Marketwatch. See what we can heckle today. U.S. economy adds 379,000 jobs in February. Yeah. Let's go. The job growth is up. Unemployment is down. 10-year Treasury yield shoots above 1.6 after job reports. Oh. Really? Why can't I see that? I'm a weeble. Can we see this? No. It doesn't have like pre-market or something, I guess. This is the 1 minute. So yeah. Well. Okay. Okay. But yes, that's the good news. So yeah, I mean, the best stocks to buy the dips today, I mean, oof. I'm gonna say the bull ETFs, the leveraged ETFs. And yeah, just because we're gonna make so much money when everything does start going back to normal, this is totally blown out of proportion. This is super, like, super overreaction. Because if you looked at the 10-year Treasury, let's go to the week chart. I think would be better, or even the month. So the month chart, like, look, it goes up and down. It's not only it doesn't only go down. It goes up and down. So there's gonna be sometimes it goes up, but that's okay. It was down so much because of the corona, and now it's back up. Not a big deal. We just had a little bit of a transition because this is signaling the economy is going back to normal. That's all. It doesn't mean the tech stocks and these growth stocks and all the ARK funds are not making any money anymore and aren't worth it and we should sell everything, or Solo is a horrible company now because bond yields went up. No. It doesn't mean that at all. All it means is, hey, the economy is going to start going back to normal. So all of these absolutely beat down stocks, the quote unquote recovery stocks, people think, oh, well, maybe those are going to have the best growth going forward since everything is opening up, since everything is going back to normal. The bond yields are going up. Hooray, things are normalizing. That's all it means. But also it means these companies that borrow a lot of money, working capital to conduct business, like some of the tech and growth ones, they're going to be paying higher interest rates. But the financial sector is doing pretty well. That's why I bought FAS yesterday, even though it dipped further down. But I think overall it's not a bad thing to. FAS is the 3x bull of the financial sector. I think it's overall not bad to add into your portfolio. I'd average down on more Soxel, Techel, TQQQ, SPXL, and UDOW, UPRO. I'd get them all. Why? Because, in my opinion, this is going to blow over, and everything is so cheap. And then the growth and innovation is going to start blasting off. Oh, not to mention the ARK funds. Things are going to start blasting off, and we're going to make a lot of money. Especially, just imagine if you're starting your investing journey right now, or you're investing the bulk of your capital right now. You're injecting it into this market. I mean, just imagine how lucky you are. But hey, don't put all of it in one day, because you can see these bond yields might keep going up. I think if you look at the yellow support, the yellow resistance, that's 1.7%. Oh yeah, it is updating now for some reason. It's 1.61. Yeah. Okay. Yep. So it's going up. But anyways, whatever. Yep. The jobs report is good. Shortages of goods from manufacturing, supply chain challenges from COVID is going to cause some inflation. There are slightly less goods going around to everyone who's getting reemployed. How far out of the money would you go on leaps on Soxel, Teckle, and Ark? Just as far as you can afford, really. The further it is, the more expensive. Oh, sorry, I'm talking about the expiration date. How far out of the money? Sorry. Out of the money, I'd probably do around a 70 delta. You want to play it a little bit safer, do 85. But it's more expensive to do 85, but hey, it doesn't matter. You could do 65 delta, 70 delta is acceptable. So actually it would be in the money. Sorry, I'm not clear. I'm all hyped right now because of these job reports. And I was out filming all day at the Neo store. So hey, if you guys didn't watch that video, please watch it. It took me a long time. And editing it and cutting together all the pieces, it's like, whoa, it's a headache because I suck at editing. And there's so many mistakes in it, but yeah, whatever. Got the point across that Neo is alright. And you know what? It was alright, but yeah, I was going back and watching that video, and then I noticed, like, oh, wait a minute. Like for the Hi Nami, the little AI robot in the Neo car, actually, because I was talking over the sales who was trying to talk to it. I think it was the sales, and it didn't pick up what they were saying. So it's like, oh, so if someone else is talking in the car, it's not going to understand you. So yeah, and also that footrest was a kind of flimsy. Anyways, it's definitely not as good as Tesla, but Tesla might feel a little bit cheap too for some people. Maybe I'm just used to German cars. Those German cars are pretty nice. You cannot deny that. Anyways, well, Soxel has super high delta even out of the money at the moment. I think it might be a mistake because it just split the super high delta if it's like 99 or something like that. That video editing was awesome. Oh, appreciate that. I might just be super critical of myself, but yeah, I thought it could have been better. I edited it out. I haven't left a lot of the footage out. I mean, I was filming pretty much man, the entire afternoon. I like how Nami's head was moving and the face was changing. I know, that's kind of cool. Definitely was cool, but I mean that EC6, the smaller SUV, that is definitely more luxury. And I mean it was brand new, so it, you know, when I sat in it, it was like, oh yeah, this car is pretty sick. But then I test drove the ES8 and it was like, well, kind of like worn down a little bit because it's the test driving car, but you know what I mean? It didn't have that new car smell, it didn't have the new car feel, and that's the most exciting part. Also, it did park itself, but see, that's the thing. Like it can park itself if there's a clear lines painted on the ground, like parking spaces. But if it parallel park, it wouldn't be able to park itself. Which there's a lot of parallel parking in Shanghai. Okay, so it would only be able to park itself in like a very clear area with like separated parking spaces, you know what I mean, with the paint on the ground with the line, not just like a random like parallel parking. So yeah, and it doesn't really drive itself, so I don't know. I mean, if I went to test drive a Tesla X right after that, then I'd probably be like, yeah, Tesla is like 2-3 times the price in China, that is, and it's probably worth it. Once the luxury cars start leaning more and more into EV, the landscape will change. That's what I was saying. You know, I wrote that article a long time ago. Not really a long time ago, but it was one of my earlier ones for the new website. And it's when I started seeing a lot of the German cars getting those green license plates. Because in Shanghai, the green license plates are the electric. I start seeing more and more of the green ones, and of course they're not fully electric, and they might not have a very big range yet. They're starting to do it, you know. Don't bet against those. Don't bet against Porsche and Benz and stuff like that. I wouldn't bet against them. I probably would bet against GM and Ford. I think Lee will still be by far the best, as it looks awesome. Can't wait for you to show us Lee. I know. I need to go figure that out. I want to just find some dude that has a Lee and then like, hey, can I just borrow your car for a day? You know what I mean? Maybe I can rent one. That's true. They have like an app that you can like rent cars for the day or something. Let me check it out. I'll think about it. Can you go over what you cut and what you kept? I mean, I cut the thing. I cut some parts like when I was in the car talking, but I had already covered it. And when I first got into the small SUV, I just went around the car and was talking about the bits and pieces of it. And then I was kind of repeating myself when we were driving around. I mean, we only drove around literally just around a couple blocks, but that's enough. You know, you cannot really floor it anyway. So there was that one road that was kind of, because we were stopped at a red light and we were the first ones and we we're turning right. It was kind of clear, so we did kind of floor it in. Yeah, I mean, it was kind of quick. Not as quick as the Tesla or Ferrari. But yeah, the new Cadillac looks incredible. I'm not a fan of Cadillac. I'm not. But yeah, the new one definitely looks different though. GM, Volvo, VW all have committed to going EV for sure. Yeah, it's gonna be interesting. It is gonna be interesting. You know, as nice as the interiors look in the Neos, at least the EC6 and the ES8, the more expensive ones, they feel nice too. Those seats are comfortable. I really like how the interiors look. I really do. But other than that, I mean, I don't really like them. So they can park themselves, but they suck at parking themselves because they cannot even parallel. Or possibly be in a harder situation. They don't drive themselves. The voice NAMI thing doesn't really work as well as you'd think. And also, when we asked to turn on the ambient lighting, like if you could say like, hey NAMI, switch the ambient lighting to green, and then it would just all go green around the whatever, the trim or whatever. And that didn't work when we were test driving it. So the sales dude was like, oh, it's because it's too bright outside. You can't see it. But I'm thinking that actually I had a car that had ambient lighting before, and you could see it a little bit in the daytime. So it didn't really work. And then when someone was talking to the NAMI and then a passenger is speaking to at the same time, then the NAMI cannot pick up what you're saying. So the screen was pretty responsive, but not as responsive as Tesla. There was some, like when I was trying to adjust the temperature, there was some lag. I mean, it's nitpicking at this point, but for sure, all of these Neo fanboys, I mean, they don't know though. Like, it's a nice car. The inside looks so nice. I would prefer a Tesla tech, a Tesla body, everything Tesla, but then just switch the interior of a Neo. That would be ideal for me. That's just my opinion. But yeah, I'm gonna try to do the Lee. That Lee is pretty nice. We'll see. But I think Next week I'm probably gonna do Xiaopeng because I know where the Xiaopeng store is. I've never even seen a Xiaopeng store, but I searched on the Chinese Yelp and there is one not so far away. So I'm gonna go do it. Anyways. So, yes, time to start ranting about this. Well, the jobs report is good, so let's see. Markets are going up. Semis are up 1%. That's good. God. Poor Soxels got clobbered yesterday, like 20%. Jesus. My Soxel just keeps getting clobbered. My Twitter just got banned for retweeting an Ark tweet. Jesus. And you know, the reason why I wanted to retweet that in the first place, I'll show you guys, is because I wanted to watch this video. Now, I never played a video. This is a Benzinga video. I've never played one, so I need to figure out like the audio and stuff. I think I should turn on the desktop audio. So if you guys have any idea what I'm talking about, let me know what I should turn on. It's audio input capture. I keep it on, right? Good morning. I think it's a desktop audio. So I'm going to go ahead and play this and let me know if you guys can hear it, because I'm not really sure which one I should turn on. But yeah, let me know.
Kathy Wood, close your fund. Close it. Listen to what the late Jack Bogle would say. Close it. Concentrate on performance, not on trying to deploy capital. It's okay. It's nose in.
Well, he's talking about the ETFs. It is not possible to close an ETF. It's just not possible. And I think he's referring to the mutual fund industry, and that's not what we are. But I think the other mistake that commentators are making is that they don't understand that I have nothing to do with the flows. In other words, the ETF ecosystem outside of Ark, the market makers, the authorized participants, they are creating and redeeming baskets of stock, which are the stocks we're invested in. I'm not having to invest those flows or raise money to satisfy redemptions at all. I am investing, pure and simple. I'm making investment decisions. I am not dealing with flows. This is such a luxury in a volatile market to be able to focus only on the investing side and not to be forced to do anything because of flows one way or the other. And from that point of view, I think ETFs are a superior wrapper for the portfolio manager. Now, mutual funds.
Okay, cool. You guys hear it? I'm just making sure. So this is about, I'll turn it down a little bit, I guess. So this is, yeah, because Kramer's criticizing Kathy, and then Queen Kathy was responding to it. But this is from the live stream from the Benzinga the other day, and she goes on to talk about some interesting stuff. Basically her thoughts right now, because if you guys don't know, she is buying the hell out of some of these stocks that we are investing in ourselves. So this is very interesting. And I mean, you guys following along Ark, you probably know what they're buying. But nevertheless, let's continue.
Funds at their place and defined contribution funds and so forth. I'm not putting them down. I think ETFs for an investor, portfolio manager, are a better wrapper.
That's your response. So yeah, it's not a mutual fund. You can't just close it down. It doesn't work like that.
The irony is all I'm doing is concentrating on investing. If you look at our trades every day, we are being so opportunistic out there during a volatile market. We trade around volatility. We are liquidity providers. When investors and speculators are selling our stocks, creaming them, our highest conviction stocks, we will be buying them. When they are hyperventilating about our stocks, we will be selling them. We will be taking profits because we know there will be another source of controversy. We'll get another bout of volatility and we can trade around it. Let me give you a couple of stats. Just Tesla alone in 2018, Tesla alone, just our trading, not the performance of the stock, which by the way, in a down year, 2018, the market was down 3.5%. Tesla was up 6%, but take that performance away. Our trading activity alone contributed 175 basis points to performance. Just Tesla. And we trade all of our names. 2019, just Tesla's trading around, added 320 basis points to our performance. And last year, even more, although we're still trying to confirm the exact number.
So, I mean, And then if we go to dig deeper into, and that was actually, I watched this, I'm like, okay, so I started watching some of these, her interview on Benzinga, and then I went to see what she was actually buying, because they've been buying a lot. They've been switching some things around. They've been buying a bunch of Palantir, Zoom, which those are the ones getting killed the hardest. And of course they're buying millions of shares. Right? So, and then she goes on to say in this interview that this is way overblown, it's total overreaction, and she likes that it is going down right now because she's taking opportunity and buying even more of the things, of the shares. She likes it because she knows that eventually it will be over. And that's, I paraphrased what she said, I don't remember exactly, but something like that. But I mean, that's kind of what we've been saying too, you know what I mean? Queen Kathy, I wish she would adopt me. Just adopt me. Kathy, if you're listening right now. Kathy spitting bars, looking at charts, buying the dip, liquidity stick. Hyperventilating around Tesla be down, don't be a clown. Nice. Nice one, I like it. Yep. So I mean, you know. So I really think that, yes, this is going to be over. Now, we don't know when it's going to be over. Because of this. Because of the 10-year treasury. But if you look at the 10-year treasury, it's back to pre-COVID levels. These candles are the month, 1 month. It is back to the pre-COVID level in February, last February. So we're back to normal, right? And that was the whole point of this. We're getting back to normal, so those stocks that got smashed the most during COVID, people kind of moved a little bit of money, you know what I mean? They moved a little bit of money out of the tech and the higher risk ones, more volatile ones, into the safer, quote, recovery stocks that have been making basically no money, while our tech and growth and innovation have just been killing it. It doesn't really make sense, but it makes sense. It makes sense, but it doesn't really make sense. But hey, it is what it is. That's just the reality of right now. So I just want everybody to understand what's going on, because if you don't really know what's going on, then it's a horrible feeling to lose money. And we're not really losing money. It's just paper losses. And the funny thing is, since we dollar cost average, and hopefully we still have some more capital to dollar cost average more. I know Kathy does. But, you know, don't dollar cost average every single hour that it goes down. But you should, something I would recommend is every other day. Right? So at first I'm dollar cost averaging on Monday that it's down. I'm dollar cost averaging on Tuesday because I'm like, okay, well, it's going down again. What's going on here? Let me buy it again cheaper. And then Wednesday is going down again. I'm like, well, hold on a second. We might be in for something here. We might be hitting an iceberg. So let me take a walk around the ship for a second and see what's going on. And then I'd hold off on Wednesday. On Thursday, I'll be like, okay, it's still going down. See what's going on Thursday. See if the water's hot, see if the water's cold, going up or down, any type of earnings, any type of job reports, anything going on. I might buy a little bit on Thursday. And then on Friday, I'm going to see what's going on. If I didn't buy Thursday, I'm probably going to buy on Friday. If I bought a lot on Thursday, I'm going to probably hold off on Friday and then buy again on Monday. Because remember, Friday usually is a sell-off day. Monday is usually a buyback day. And depending on what's going on. But yeah, that's just my basic advice on dollar cost averaging. But anyways, so again, everything is normal here. Yes, the yields are going up, but I don't think it's going to go up very much further. I think we might be in for, well, let's go over to the week chart here. Yes, that's right, the week chart. Yeah, I think we could probably see couple more weeks going up, maybe to 2. I mean, that's what I was thinking before, maybe 2%, 1.7. And if it's 1.7, it would be pretty great. So maybe just another week or 10 days, I would estimate. All right. But again, it could just start popping off right now because, well, 10-year treasury is technically, it is back to pre-COVID levels. Things are back to normal, right? And it's almost hitting on this support. So I would be looking at this key support at first. First of all, I'd be looking at that. And it hasn't quite gotten there yet, but let's just see. Today we might have gotten a little bit of good news. The jobs report was good. Much better than expected, seems like. We might have gotten a little bit of good news. So let's see what's going on. And when do you sell? Buying the dip is easy with unlimited funds. I mean, so like, when would I sell? For sure. If you have another income source and you don't spend all of it, you know, there's some other, you know, you could save $500 a month, maybe a couple $100, couple $100 a paycheck, and you could keep buying throughout the dip. But if you, as long as you kept your job. But yeah, I mean, you sell at when everything is just hype. Everybody is being greedy. That's when you would sell some, and you don't have to sell all of it, but you can start taking some profit. I would suggest raising 15% cash. Keep 15% cash, and I kept 15% cash, and I didn't spend my 15% cash so far. I probably spent just on buying the dip, because yesterday I cut about $10,000 or $15,000 of shorter term positions, and I dollar cost averaged my longer term positions. So I kind of switched it around. But totally, I bought the dip maybe just $15,000, $20,000, not even that much. In perspective to my portfolio and how much cash I have, 15%. I'm not trying to brag. I really hope I'm not coming off that way. I'm just talking about myself, my own personal experience. So in relativity to my portfolio, I didn't even spend that much so far, and I've got more cash on the sidelines. So I don't even know the exact numbers, but it doesn't matter. That's not the point. The point is, you can't put it all in at one time. Every other day, I would suggest something like that. I wasn't doing it every day, and I kind of chilled out. And yesterday, I moved some things around, but I moved it into a financial sector because I feel like my portfolio was lacking a financial sector, which is doing pretty well with the rising interest rates. So we'll see. We'll see how it goes. The only thing else that I wouldn't mind adding in would be the oil play, probably the ERX, because even they have a dividend we were looking at yesterday, but I don't really want to do that because the thing is with oil, it's gonna go down. There's some periods where it's going up, and there's some long periods where it's going down. So, anyways. Yep. So, yeah, I know. S&P 500 and NASDAQ going up, huh? I'm looking at it. Tech is up 1. I mean, oh, shaking my head is up 2.4. Yeah, boys, come on. Give me a green day so I can sleep good tonight. You know what I mean? You guys probably know what I mean. Hell, yeah. Shaking my head is 2.4, but hey, too early though. That's SPAC ETF, man. When things go back to normal, which could be now because our bond yields are back to normal. But seriously though, when things get back to normal, I would be interested in checking out this SPAC ETF. I love ETFs, guys. If you haven't noticed, I really do. It just really like saves a lot of time on research and analysis because ETF you're already diverse. I mean, as long as the ETF is managed well, I wouldn't recommend doing some really small ones that nobody's ever heard of. You know what I mean? But Anyways, so one thing I wanted to do was look at the Marketwatch. Let's see. So what's going on the old Marketwatch? This is my favorite news site to read because they usually have some interesting graphics. What's next for the markets after Fed Powell signaled he's not riding to the rescue just yet? Yeah. Thanks, BFF Powell. Powell's not our BFF after all. But that's okay, we don't need him. Legit. We're just gonna buy cheaper tech growth and innovation stocks. What's going on? Opinion. Men, here's how to help the women in your life get ahead at work. Yes, we need to know this now. We need to know how to help the women. Gosh, Marketwatch. Do you guys not realize why people want to come to the Marketwatch? Because they want to watch the markets. We need to know more about the job reports, not about how to help women. Although women, they don't even need help. They're totally capable. They're totally capable of doing things by themselves. They are totally capable of getting ahead of work. That's kind of sexist now that I think about it. Hey, I think Twitter should go ahead and ban Marketwatch instead of banning me. I am forward thinking. They are not. Cool. So unemployment is down. Man, that really spiked up, didn't it? Getting back to normal, but Powell's not going to do anything until it's probably back down to... Man, those were the Trump years, weren't they? For all the things that you can find to talk in 2018. Dang. And I feel like if Trump was the president right now, he'd probably be tweeting like something about Powell doesn't care about people I do. Probably would be some entertaining tweets to read, but yeah, kind of miss those tweets now, don't you? Seriously, I don't get political. It doesn't matter if Trump is the president, Biden is the president. Like, they all have specific things that they want to do, and we're gonna buy whatever they want to do. Whatever their agenda is, we can buy it. Doesn't matter. We just want to make money. So it's looking pretty good. Let's see. Buy selected industries. Average hourly wage. Guys, I need sleep. Average hourly pay. So it's gone up a little bit. Good news. What is this saying to me? By selected industry. So job growth, I assume. Okay, so mining and logging is not doing good. Construction is not doing good. Now that could be interesting. We could look at that for our REITs. So for real estate, the new housing developments and whatnot. But we'd have to look more into that. not so quick to judge that number. Manufacturing, wholesale, retail trade is up a little bit. Transportation, utilities, information, financial, actually down. Funny how things work out like that. They suck. These industries suck, but they're going. The stocks are going up. Business, education and health, leisure and hospitality. See, that's the thing. That's the thing right there. So it's by the thousands. So it's 355,000 new jobs, right? That's what this is telling me, right? Jobs growth per February, 355,000. Wow. So is it time to buy those leisure and hospitality stocks, like possibly a Las Vegas Sands, possibly Jets? Interesting. I don't know though. I'm pretty skeptical. Because What if people just don't have any extra money to go traveling though this summer? Or go to have some leisure and hospitality? You know what I mean? What if it's disappointing? What if it's a letdown? What if it's not as much as people think? I don't know. I'm just saying. If I had to put my money in something, it's probably not going to be airlines. And it's probably not going to be hospitality and gaming. I mean, sure, we can get some calls, some short-term get in and get out type of things, but I wouldn't really bet so much on it though. And probably I'm wrong. And hopefully I am, because I do hope everything gets back to normal and people go to the beach and stuff this summer in droves. But hey, we'll see. I don't miss Trump's toilet tweets. Yeah. I'm totally with you. Especially, oh man, especially living in China and having a lot of Chinese friends. It's like, oof. Those were a hard 4 years for me. Because, oh my god, everywhere I turn, I just gotta hear about that. Because Chinese are very interested in Donald Trump. Very, very interested in him. So, yeah, at least I don't have to hear that anymore. So, what else we got on this in this article? What time is it? Okay, we got 8 minutes. Plenty of upper middle class have money to spend on travel. Yeah, that's a good point. I'm just hoping that it's not going to be let down though. That's all I'm saying. Hopefully it's not. I'm probably wrong about that. Like I said, the U.S. created 379,000 new jobs in February, the biggest gain in 4 months. In what's likely to be a preview of a surge in hiring in the months ahead, most people get vaccinated and the economy fully reopens. Yep. The official unemployment rate, meanwhile, slipped to 6.2% from 6.3%. That's good. Although economists widely believe the real rate is much higher. Stop it. Just stop it. Take that out of the article, please. We don't want people to know. Keep that on the low and low. Federal Reserve officials peg the jobless rate at closer to 10% after adjusting the data for distortions caused by the pandemic. You know, Marketwatch always got to throw something negative in there. Let us just have one green day. Let us have one green day. Or just go ahead and change these colors to red. Just change it all to red up here. We don't need you to have green colors. Because you always just like red. But see, that's the thing. I kind of like red too. Because we're going to buy so many good things for so cheap. And we're going to make a lot of money though. We're not going to make a lot of money today. We're not going to make a lot of money in the next month probably, to be honest with you. But eventually we're going to make a lot of money. And it was the same situation I had with the COVID. Yeah, I mean, it was crashed. It absolutely crashed in last March. You can't really do anything about that. You just gotta keep buying them. You just gotta keep buying down. And when I bought all my SOXL and the TECL, those 3X, the 3X ones, the more risky ones, I didn't just dump all the money in on one day. Even it's going up, I'm dollar cost averaging. So yeah, I mean, and I didn't make the money in a month. It didn't take a month. It took almost a year. So, but that's okay because we're gonna make a lot of money. But it just takes some time. But overall, this is good news. This pullback is really kind of painful. This is a painful one, but it's okay. It's healthy. At least you get a new president to be embarrassed about every 4 to 8 years. Yeah. I don't really care. Aside the living in a different country, and it's like goof. Especially a country that really is trying hard to be better than the US, which is my country. And they're very self-conscious and insecure, I would say. At least you could say the government is or something, and it kind of rubs off though a little bit. I don't know. It's really weird. I really hate getting into those type of things. You know, if everybody was making a lot of money every day, nobody would be talking about any of those negative things. Fighting on Twitter about politics. People just need to make money. That's all. Man, I loathe the market blog websites. They are the epitome of reactionary BS that further foments the worst emotions and the irony that there were charges against Reddit. Oh, market. I understand what you're trying to say. Don't worry. I know. It's crazy. That's what I'm saying. Marketwatch need to change their colors to red because they're not helping anything. They literally gotta be like, oh, you know what? Look at these numbers right here. This is the official unemployment rate from the U.S. government. It says the unemployment is 62%. The official one is 62%. But hold on there. A lot of economists don't believe those numbers because they're all conspiracy theorists. They think it's actually double. 10% unemployment. Nobody has a job. I mean, wouldn't that be kind of easy to check? You know, it's like 10% is one out of every 10 people don't have jobs. That's crazy a lot though, if you think about it. But anyways, they're all conspiracy theorists, says Marketwatch. Apparently, the economists are right. Probably, especially the hedge fund managers are right. Big whale money managers are definitely right. They think it's much bigger because they want you to sell more and they don't want you to believe this good news. Marketwatch probably is only ever going to write one article on this, and they don't have any substance in this article. It's just a bunch of, well, bunch of nothing. What they are saying, the big picture. Let's see what Marketwatch says the big picture is. The economy is poised to start growing by leaps and bounds again after a tough winter, if the coronavirus vaccines prove very effective. Okay, it was a tough winter? Was it though? We were just at all-time highs a couple weeks ago. And yes, I know. The economy is not the same thing as the stock market. But still though, was it really that hard? Do we really need a new stimulus? I'm questioning everything. Is the unemployment really 6.3%? I'm questioning everything thanks to Marketwatch. An effective vaccine will allow states to remove all restrictions, let Americans go about their lives, again without fear for their safety, and give companies the incentive to hire fresh government stimulus. Yeah, we've had vaccines though. Had vaccines since for the entire winter. Like, I know we didn't have very many of them, but are people even taking them anyways? Are there incentives to even take the vaccine now? I don't know. I really don't know. For this part, I'm not being sarcastic. Because I'm not there. I really don't know how it is. In China, it's been back to normal since last, like, summer. Seriously. Or before. I have no idea what's going on in the US as far as coronavirus. So, yeah, I mean, I legit don't know. I'm not being sarcastic. What are they saying? We need to know. What are they saying? Who is saying it? With vaccine distribution continuing to accelerate and with an economy in initial stages of reopening, the coming months should see robust gains, said chief economist. But see, the problem with that, Kurt Long, is that it's going to be gains in what? Because our portfolios aren't really having any gains right now. But hopefully it changes. If you're talking about gains in oil and gains in the reopening stocks, then okay. The engine of economic recovery is restarting as the pandemic's winter wave recedes, although there is still a way to go. They always want to walk it back. Every single time they're going to walk it back. Well, like the unemployment is 6.2% now, but actually it might be 10. We don't know. It could be though. Could be much worse. Like, okay, the economy is getting better and we are reopening and the hopes are high, but it's still a long way off. The economy would need to add almost 1 million jobs a month for the rest of 2021 to return to the pre-crisis levels by the end of the year. we don't need to necessarily return to it. Just pay everybody a what's it called? Whatever he said. the $1,000 a month. Stipend? What's the word I'm looking for? Yes, I really suck at English this time of the night for me. I apologize in advance. Man, how did you end up in Shanghai? Came to make money. To be honest with you, 10 years ago, the economy sucked in the States, and I finished school up, and I didn't have a job. But I ended up doing all right here and sticking around. But I am moving back soon enough. Once the corona chills out a little bit, I think. Stimulus, huh? That's right, we're getting a stimulus, huh? Nice. Well, the markets are open, huh? Should we even look at it? Guess so. Oh. The bond yields are going down? Was up past 16 before. Arks are up. Not all of them, though. Nasdaq is up 0.7. Dow is up 0.9. The XLK is up 1.2 actually. SMH is up 2%. Okay. Cool. So the only thing I have going on today is an expiring Tesla cover call. And so I'm not going to be doing anything. I want to see what's going on today. I wouldn't be surprised if it's flat, because what every single day this week was red except for like Monday, right? Monday was green. It wasn't that green. So I don't want to do all that much today, but I don't want to do that much today. We'll see. Because look, right now it's Titanic mode. We are literally in Titanic mode. We are in iceberg mode. So we need to be a little bit careful. I don't know what you guys' strategy is. Let me know what your strategies are. But personally, for me, sorry, my nose is itching. My strategy is cutting all the short positions, dollar cost, using that money to get into dollar cost average, the longer ones. If you don't see yourself holding these things for 5, 10, or 20 years, get out of it. We don't know how much more these bond yields are going to rise. We don't know how much longer this is going to last. Nobody actually knows that. So we're just going to have to see. But eventually, though, the good news is eventually these tasty tech growth and innovation stocks will be cheap enough where people are like, man, well, majority of people will be like, man, that's a good deal. Let me buy it. But yeah, speaking of Shanghai, hey, I made a video today posted on YouTube. Check out my channel and subscribe if you're not already. But check it out. I went to the Neo store and test drove a Neo. It was pretty cool. I spent a long time on that one, so I hope you guys can check it out. But yeah, I had time because it's not really much to look at in the stock market. For my strategy personally, just kind of cut everything and get into my longer term positions. You know, SOXL is down so much, there's no point to even sell it. Just hold it. Wait for it to bounce back, because once it does start bouncing back, oof, it's going to bounce back hard. It's going to bounce back super hard. So I'm excited. And I'm thinking about adding some more money into it, but I'm not in a rush, because to be honest with you, I think this is going to continue. I think it might even continue up until the this somewhat of a support, although I cannot say how strong that support is, but looks pretty strong though, to be honest with you. That's been holding for the most part, except for 2 instances. Well, since the year 2001. So that's pretty crazy, but so there was one time it didn't hold, and then another time it didn't hold. 2018, yeah, 2018 it did get a little bit crazy for a brief moment there. But anyways. See how it goes. Yeah, we're gonna see if it holds for sure. Don't be surprised if it doesn't. We've seen this literally almost every single day this week. Thinking things are gonna be, oh, it's turning around, oh, it's going up, we're almost breaking even for the day, and then it just totally jumps off the cliff. Or the market opens and like, oh man, we're up like 5% at the market open. So yeah, don't really believe anything anymore. But the key for me is watching this 10-year treasury. I mean, it's kind of going to depend on that. It's at 1.571% right now, which is seriously is nothing. I don't know why people want to have that. Well, I mean, I do. It's because you have like, you know, tens and tens and tens and tens of millions of dollars. You can't just go to local Wells Fargo and be like, hey, I want to put this in a savings account. So, yep, you just got to kind of have, if you really do have that much money, you just got to buy treasury bond. Things like that, you know? Because the insurance for the banks, the FDIC, is only like 500,000, right? Anyways, I want to read more of Marketwatch. See what else they got interesting. Just refresh the page. Employment rose among those in California. Universal income experiment that he finds. Hey, that's what we were just talking about. Employment rose, huh? I mean, it kind of makes sense. It's like, well, maybe we should read the article first. Don't be the typical millennial, just read the headlines. Oh, there's my paywall. Got tired of us heckling it. Oh, back to the headlines. We can use our imagination. Employment rose among those in California universal income experiment study finds. So, I mean, I guess it would make sense because if you were getting like $1,000 a month for basically for free, and so it's like, dang, I can actually make like a lot of money if I have a job, make $1,000 more. That's pretty cool. I mean, if you're making $3,000-$4,000 a month at your job, then you also get another $1,000. I don't think you'd want to quit working because it's not like you're getting $5,000-$6,000 a month in the universal income. But yeah, I mean, it kind of makes sense. $1,000 is enough where it matters, but it won't be enough to quit your job. I totally agree with that. I mean, I wouldn't mind if Andrew Yang was the president. That'd be cool. Give us all the universal $1,000, and then we don't have to do any type of others like welfare or anything like that. And yeah, I mean, I think it'd be cool because people could just decide what they want to spend the money on themselves. I think overall it's pretty libertarian. You can get Ark F January 23, 57 calls for 1100. Delta not highest, but it starts bouncing back up. Yeah. Sure. I bet you those are cheap. I'm not even looking at them right now, but probably dollar cost averaging more maybe Monday, but we'll see how it goes today. So far, I mean, it's definitely going down. I mean, NASDAQ is almost at a break even. And then let's go see the spark line. Yeah. Stoxel is up 3%. The oil is doing good. And then my financial sector bull is actually doing pretty good too. I got that yesterday. I'm probably breaking even on that actually right now. Dow is doing fine. tech is doing fine. NASDAQ isn't doing that fine though, but it seems to be swinging back up. Whatever. Let's see how the REITs are doing. Oh, is down 0.5%. Interesting. Okay. Well, we can watch that one. It's at $59. $59, huh? Man, it swing that trade that so easily though. Up, down, up, down, up, down, up, down. Okay. Well, my cost basis is lower. I wouldn't mind buying some more. Why not? I guess I can buy it. Seriously, then. 1,000 shares? No. 500. Well, it would be nice to do that though. But probably better to dollar cost average and start with 100 every couple days. See how low it can go. Could be interesting. But yeah, anyways. Could start dollar cost averaging. I mean, I don't want to do it though. See, that's the thing, like I was saying before, it's you can't do it every day. Because we don't know how much longer this is gonna last, you know? That's the problem. Yeah. Just looking at the treasury yields. Apple's down a little bit. Let's see what's going on. Wow, O is going down. Is it because the yields are going down now? No, it shouldn't be. Out of all the stocks I have on my watch list, Gush is up the most. Hey, our VATQ. Nice, up 4%. I still got that actually. The BES, can we buy it now? No. Anyways, it might be past the time for that. Maybe not. Could be really cheap. CLII, and then the banks. That's not surprising though. And then the oil is not surprising. Baba, at 1.5%, really? Ford is at 1.5%. Shaking my head is only 1% now. Where are you? Socks. Yeah, NASDAQ is not doing very well compared to the other ones, but actually a lot are up anyways. Something that we're gonna have to look into once everything chills is gonna be iPod, iPof, iPo. Those are getting cheap, and Chamath, he's not playing around. He doesn't play around. So eventually, those are gonna be worth $20, $30. So even if you buy commons, you double, triple maybe. But maybe not necessarily anytime soon. We could pick up some. If you want to do ETFs, I would do ETFs. ETFs are going to be your best bet right now, in my opinion. Instead of trying to guess which one's going to be the best. But if you enjoy doing that type of thing and you would prefer, I would probably get some Zoom, some Zillow, Maybe some more Facebook. Because those are going to be hit a lot. Zillow could be interesting. Oh man, even just start dollar cost averaging down those iPod or something. Could be really interesting. But yeah, I kind of want to get some of the, I want to set a limit order at least. I can't post anything on Twitter because I'm all banned right now. So silly. But man, if it goes to, yeah, because my cost 57.6. Very interesting for me at 58.5. Starts to be very interesting. Now it's just like, well, okay. But if I could get maybe 50 at that, yeah, that's not that much money. Extended hours, time and force, until canceled. We could get 50 at 58.5 and then another 50 at 58. Okay, I'm gonna go ahead and execute that and then do another 50 at 8. Okay, both of those are in. I'm gonna dollar cost average down to my cost basis and then keep going down further if I need to. But it is getting on the lower point of how it's been trading since the COVID, since after COVID for it. This one is still way undervalued and they pay 4.5% dividend every month. 4.5% per year, but they pay the dividends every month. And then on this orange support line that I've drawn, which might not be valid, but it's dipping on it right now. Interesting stuff. Yeah, maybe I should get some Nalo just in case it does hold that support. Yeah, we're gonna do it. This is one that I hold for basically the rest of my life. So this purchase I will never be selling. So on one hand, I don't want to do too much, but on the other hand, I can do. So let's try to do another 50 at 58.8. Order to 58 point. People's asking 58.88. 200. And thousand shares available, almost 1,000 shares. Fine and not all that big of a deal. So we'll see. But point is, this one's going down though. It's down 1% today, and that's another big red candle. So starting to get pretty interesting. Yesterday it held that support, so maybe I should just go ahead and buy it, huh? Yeah, let's do 58.85. I just want to get some more. Okay, it's only 50 shares. .8. Just do point. Almost gonna hit it. Gonna hit soon. All right. So what else is going on here? Oh yes, already hit. Already filled it. Cool. Back to the ETFs. So Nasdaq is down 0.3. S&P 500 is up barely. Shaking my head is 0.5%. Yeah, things are going down. Arks are getting killed again. All right. Well, there we go, guys. Welcome to the stock market. What's the Marketwatch got to say about this stuff? Nothing very interesting. Tesla 590? Oof. That is. That's a good point, huh? Down 4%. It's on my cut line too. That's a problem. It's a little bit low for my liking. I don't really want to sell it though. I'm still above my cost of basis here. I could sell 50 shares. Yes, but maybe not. Just wait. Tesla's still overall good. I feel confident about Tesla because of Neo I went to go see today. I still think Tesla is much better. So we're just gonna wait. But anyways, not much we can do. Let's see what's going on. Ford is up 1%. That's good though. So what are you guys' plans? What are you guys planning on doing today with all this stuff? Let me know. Yeah, I think we're just gonna hold off on selling the Tesla. I mean, I don't want it to dip below my cost basis because there's just no point. I'm so exposed to Tesla. But I don't think that there's any reason to panic. Overall, I could definitely see myself. I mean, the question is, do you see yourself holding this for 5, 10, 20 years? And for me, the answer is yes. Tesla and Neo have sold off. But the EV party is just getting started, and China is key, say the analysts. Neo heads deeper into bear market after earnings. Gasoline prices may hit highest levels since 2014 as OPEC Plus keeps oil output cuts. Report. Mortgage rates soar above 3%. Why can they go before they scare off homebuyers? See, that's what I'm interested in. Because eventually they will. Eventually they will go too high and people will stop buying homes as much as they have been, and then therefore the real estate prices should go down. That'll be interesting. What do you think of long calls on Roku? Say December 21st at the money 350. And it's, yeah, I mean, you could try to do it long, but if you wait for 1 or 2 more red days, I mean, they could be half price from what they are announced. So it's hard to say. me personally, I'm trying to stay away from those shorter term positions right now. I mean, I know it's December, but that's, for me, that's still, I can just consider 5 years at least right now. Setting up profit take on SQQQ and buying XLK. Cool. Sounds interesting. Is it worth selling some RK and rebuying? Assuming it hits. Yeah, I mean, it's possible. It is possible, but if you don't do anything, then you can't make a mistake. Because as soon as you sold it, it might go up. Which is not the end of the world because it's so cheap. But still. You know what I mean? Oof, Tesla's 587. Yep, Tesla is down 6%. That is a lot. Jesus. 1.6 trillion gone. Nasdaq stock implosion gets really expensive. Former Ford CEO on what he expects from the auto industry's EV push. Yo, Tesla is selling off crazy. Is anything green? The Dow is not really. Oof. Ark down almost 5%. Tesla's down 6%. Q, I mean, oof. XLK puts, huh? Yeah. Well, you can have mine. Well, let's look at the SQQQ. Yeah, I'm keeping my RKF leaps. I'm keeping everything. Those are my longer term positions. I'll keep the leaps. The leaps that I really, really like. For sure. Everything else I cut though. Leah's down 3.9. Oof. Even the SQQQ is only up 1.6 though. Not even that much. Yeah, I mean, T-Triple-Q is down too. So for sure, but... Oh yeah, we're coming down to the 180. We're almost there. We're almost to the 180-day moving average. That's interesting. Well, I thought SPY is up barely though. SPY still has further way to go from the 180-day. Okay, Tesla seems to be going up a little bit, but I don't know. Yeah, things seem to be trying to find a bottom. Bouncing a little bit. SMH is actually positive. Oof. That's at least a good thing. That's at least a good thing. My option, I made money in my options today. What? Is that possible? Oh yeah, my ARK-G leaps are down 50%. My ARK-K leaps are down 40%. ARK-W leaps down 56%. Okay. Even my FAS is down too. Huh. My cost basis is 84. Oh, my cost basis is 86. Even FAS is down today. My Costco ones got killed. Yep, and we're past the earnings now. Might as well close it. And the Apple is only down 37, so that's actually not that bad. Ark F is only down 36 cents. My XLK puts did not do very well. They just didn't go up. There's no volume on it. It's too far out. Yeah, it's way too far out. But that's really weird because it spiked when I bought them, obviously. And this dip is much worse than the one when I bought them. So I really don't understand that, but as of right now, there is no volume. We even have a bid for 200 at 1 cent. That's literally what I could sell it for, is 1 cent. No point. There's no point to sell them. How's the FAS doing? Okay, the FAS is going up. And then the oil ones. Okay. Okay, everything is not so bad now. It's turning around a little bit. Seems to have found the bottom, but it's way too early to talk. As we know. But the ERX is doing really well. Can oil go up much further though? That's the question. I mean, we're literally seeing some pretty high levels right now. And even in Chevron is paying like 6% dividend, but it was somewhat tempting. But man, these levels are almost up to pre-COVID. Pre-COVID was around 110, 112. It's 107 right now. I mean, that is, you know, maybe once those do get back up to the pre-COVID, then maybe things will shift back into growth. Possible. Anyways. Wow, space is $27. Workhorse is $13. Man, I'm glad I cut those. To be honest with you, I'm glad I cut all of those options I had. Not last Tuesday, but the Tuesday before. I cut the other ones. Cut a lot more yesterday, or a day before yesterday, or something. I forgot. All blends together. Anyways, guys, it is what it is. We're just in for a ride. Today is not looking so bad so far, but it'll change. Stoxel has just gotten beaten down. Not quite as bad as NASDAQ, I guess. Well, the TQQQ. But it's still bad, though. So we'll see. We'll see if it holds. I mean, eventually, guys, this is going to come way up like this. Now, I don't know if it's going to go like this first. And then go like this. But who knows? Or, you know, it might even go like this first. Nah, it won't go like that. But anyways, we don't know. But eventually it will come back up to the 50-day. 50-day is about to roll over. But anyways, it will eventually come back up. So we'll see how long it takes. I'm like everybody. I hate to see losing money, but I'm not so worried about it though, for some reason. FLGT? Okay, we can check it out. Fulgent Genetics. It's up 8% now. Yeah, I see it was up higher. It was up. It got up to, it opened at 113, 111 today. No, it opened at yeah, almost 111. High was 112. Already back to 192. Yeah. Anyways, guys, hopefully that my video that I made about Neo today when I test drove the Neo hopefully takes you guys' mind off crazy times. But I know a lot of you guys are making some moves right now. I've kind of set myself up, see how much further it's gonna go, and then I'll start doing some more things. But that's just my style. I believe in my long-term positions. I strongly believe in them. I basically only have long-term ones left. Took some losses, had to cut some, but it is what it is. Well, how do taxes work with trading options? You're gonna get hit with income taxes if it's less than 12 months. So basically, you get your tax form from your broker once a year, and then you just upload it to your online tax people, or just give it to if you have a tax guy, just give it to them. It's pretty simple. Like if you use TurboTax or H&R Block, you could just download the tax form from your broker like Webull or Robinhood, and then you upload it to H&R or TurboTax, and it should automatically go through and calculate those things. But if it doesn't, then you have to manually enter in every single time you bought and sold for how much. So that's a pain. Worth paying somebody, in my opinion, to do that if you have to do it manually. But anyways, pretty much like that. Yep. So you'll get hit with income taxes, your income tax bracket. But if it's more than 12 months, then it's considered long-term capital gains, which is only 15%. And I believe only California considers long-term capital gains as income. They're actually going to hit you with an extra income tax if you live in California. But I'm totally not a tax expert. That's all I know. I don't know anything more about taxes, so don't ask me. But I know a lot of people want to know. But basically, it's something like this. I'm not an expert, so hopefully you guys don't listen to what I'm talking about with taxes. Yeah, Costco's getting smashed though. That's really too bad, huh? I had to cut it. I should have cut it. Attention. And Costco is going down. Crazy down levels. Really, it's crazy. I think Costco might go down to 290, which is like level it was on last summer. It's really, things are taking a hit. So yeah, forget about that. Solo is down sub 5. And Solo is trading on the 180 day. NASDAQ looks like it's breaking green. Anyways, guys, just a bunch of sit here and looking at what's going on. There's no point to do that. I would suggest tread carefully. Don't dollar cost average too much just yet. It's not over yet. So we'll see what's going on. But watch my video if you didn't already today, and follow me on Twitter. Even though my Twitter is suspended right now for like 10 more hours. All because I retweeted an Ark tweet. So anyways. Longer stream today, I hope. Each time you sign off, the stocks go straight to hell. think the longer you stay on, we bounce back. No, I noticed that too. I guess once I kind of do what I gotta do, then I kind of walk away, let the limit orders run their course. No, this happened a lot. As soon as I sign off, I'm thinking, oh, okay, well, it's not that bad. Not that bad. I can just relax for a little bit now, and then all of a sudden, horrible. Where are my rental properties? In the States mostly. I do have one in Spain, but I'm actually selling it. I think I might be getting an offer. I'm pretty happy about that. The Spanish market is so underperforming, so I'm trying to switch some things up. They got really hit hard with COVID. I'm not too happy about that, but yeah, I don't know. The plan is, I guess, I'm selling this property there, and I was thinking about buying some more rental properties in probably in Texas, but we'll see. I considered Southern California, but I don't know if I want to get involved in that. So I might just do Texas. I have some in Vegas. Well, might get one more in Vegas, but I'm not sure. But anyways, we'll see. Whenever I sell the place in Spain, hopefully it's soon though, because oof, I don't know. I don't know how much of a hit I'm gonna have to take on it, but I want to go ahead and get it out, because even I could take the money and put it in though. I was seriously considering that. You know, if you want to invest in real estate without a headache, if you want like a rental property without a headache, I mean, I will highly suggest it, because they're paying more than 4.5% and they're growing on average 24% per year since 1994. Can't really beat that. Some years are not going to be as good. Some years might go down, but on average, for the last was it 20? I don't know, 25 years, something like that. Gone up 25% per year. Plus they give the 4.5%. So you're almost making about 29%, 30% per year. And the dividends is cash, so you can do whatever you want with it, or you can reinvest it. Do they cash flow, or is it more about the equity? The one in Spain just sucks. Cannot emphasize how much it sucks. That's why I'm selling it. Nope. I'm gonna take a hit on the equity, but I can move it over to something better. Like I've been trying, because of the COVID, I've been trying to rent it for a long time and can't. And I've already lowered the rent on like more than half almost. I think it was about half for what it was pre-COVID. So it just sucks. And it's downtown. It's a really nice area too in Spain where I bought it, but it's just not a good. So hopefully I can sell it. I don't know how much I'll take a hit though on the price, but we'll see. It doesn't really matter. I can buy more socks and double my money in probably a few months. I wouldn't be surprised. But the ones in Vegas, yeah, they cash flow for sure. But I got one in Vegas empty right now, and I'm probably gonna. I just renovated it. Probably gonna keep it empty because I'm probably gonna go back there and stay there for a little bit. Just a small 1-bedroom though. But Vegas is nice. Because I mean, there's a lot of things to do, and there's just no taxes. Basically, no property tax. Basically, well, no income tax, and the other taxes are cheap too. So I like it, and Vegas is on the up and up too, because they built a new stadium. The Raiders are there now. The Google data center. They're redoing and spending a lot of money on downtown, developing the downtown areas, making it nicer, and some roads, like it was like Boulder Highway. They're redoing it, beautifying it. So yeah, And with the quote unquote California exodus, getting away from those high prices in Southern California and moving over to Vegas, I mean, it's gone up a lot. I think Vegas was up like 14% last year. So hey, it's not bad. And then plus you can probably get ROI. I mean, cash flow probably about 7 if you're lucky, 7% if you're lucky. So you could do all right. Not that good. Oh, and that's for 7% is without any leverage, without getting a mortgage. You could do a little bit more for sure. You probably do. Oh man, I'm not doing. I paid all cash for my properties, but I think off the top of my head, it's probably about 15%. You probably could get away with in Vegas. 15% plus you could rent it out for. That'd be all right though. But overall, though, the O is interesting. They're only paying the 4.5% dividends, and then you could get a rental property in Vegas, just for example. Small one too. They're cheap. Small 1 bedroom, close to the strip. You could Airbnb it if you want to put in some work, and make probably double, triple of the just finding a long-term renter. And when the economy opens up, that's going to be hot, so I'm considering it. But biding my time right now because I'm gonna go stay in one of them. Yeah, that's all right. I mean, probably could do 6-7% if you paid all cash for the property. And I mean, because it's all cash, I want it all cash because if the prices do crash, then I can still pull equity out and buy some more things. So I want to keep it all cash right now. Yeah. Well, it's not bad, but I mean, so yeah, you could get like 7% per year, let's just say. But then the O is only 4.5. I mean, it's kind of a trade-off. But you don't have any headache, and O can appreciate. But also, your house can appreciate too. But 25% is kind of a lot. Think about it. So O is doing pretty good. I mean, I would expect maybe Vegas could go up. I'm pretty sure Zillow is predicting it to go up 7%, 8% this year. But last year it was up 14, 15. So let's just say if it goes up 7, 8%, so say 7%, plus you could probably do another 7, so that's 14. You could leverage it. You could probably do 15% plus the 7% appreciation. Something like that, but that's just like bar math. That's not sitting down with my Excel spreadsheet and really calculating and crunching the numbers, which these numbers are not hard to crunch, but hard for my brain right now. But nevertheless, yeah, Texas has crazy property taxes, and yeah, I know. I have properties there already. Just me, no. But they don't have income tax, and the rent is more than other places, so it kind of is about the same actually. For example, so I'm considering buying in Vegas. I could buy a house, a single family house, small, old, for 300,000. I'm talking maybe 1,400 square feet. I'm talking about a small one, single family, old, downtown, no HOA, but it's close to the downtown area in Vegas. And the interior is pretty nice, let's just say. There's a few I'm looking at right now, around 300,000, and they can rent for 1,500. I expect 1,500 per month. Okay, so cool. 1,500 bucks. Paid 300,000 for the home. It's kind of old, so there might be some repairs, but you know what I mean. But okay, but there's no HOA, so I'm saving on that because downtown Vegas, the single-family homes, those neighborhoods don't have HOAs. So I mean, you save a little bit on that. There's no income tax. The property taxes are basically non-existent. Like on that condo that I have right now, that's empty. For example, I only pay $400 a year, which is crazy nothing. If you know, in Texas, this year I paid 11,500 on one of my homes. So it's a big difference. So yeah, the property tax is a lot cheaper. So I can save on that. But I'm only getting $1,500 and I'm paid $300,000. Now, if you go take a look at Houston or Dallas, for example, in Texas. Now, Austin is different because that's very expensive. So it's different, but look at Houston and Dallas. So you can get a home for a $300,000 home. You can get in a really nice neighborhood, 2,200 square feet, and it can rent for more than $2,000 a month. Maybe 2,100, maybe 2,000. We'll see. Something I would expect something like this. And so yeah, so it's making $600-700 more per month, or maybe $500 to $700 more per month, and that's gonna make up in your property taxes. So it's actually about the same. So then the question for me is, well, if it's about the same, where would I prefer it? So my thinking is probably Texas, because Texas is on the up and up too, and the houses are much newer and nicer. And I mean, don't get me wrong, Vegas in Henderson or Summerlin, they have really nice houses too, but those are a lot more expensive, and it's hard to find a $300,000 house there. But I mean, I'm not against to getting one of those single families in the downtown Vegas area because it's close to the strip, and you can always make an Airbnb play on it and get a lot more money. Probably you can get, but it's also a hassle. So that's why I'm a fan of the O. Although, to be fair, I didn't really put my money where my mouth is. So far, I've only got like 20,000 in O, and I've got a lot more than that in actual real estate. So, but the thing is, real estate, you actually got something you can touch. So there's always that. So if I move back, I got some. I'm gonna be, if plan to be in Vegas, for example, I can always stay in my place. And then if I'm not staying there, I can rent it out. Anyways, fun talking about that. I'm really into real estate. I don't really talk very much about it with you guys, but I've been pretty deep into real estate. Not like nothing crazy. I'm not building skyscrapers or anything like that, but I do a few things. And yeah, so I'm selling my one in Spain right now. We'll see how it goes. I'll let you guys know how it goes, how much money I'm gonna lose because of the COVID. It's okay, I can lose the money because I prefer to put it in US market and make money. So just kind of like that. But who knows, maybe I won't lose money. Maybe the offer's just gonna be so good, but overall, and you know what? I bought that house. Well, it was a flat actually. Flats. Right, for all of my European followers, you know that it's called flat versus apartment or condo or whatever. I don't even know. It's so confusing. In China, I usually use the word apartment. In America, it's like condo, and then in Europe, it's like flat. So whatever. But anyways, it's a 3-bedroom apartment in downtown Barcelona in a very nice district. I don't know if you guys are familiar with Barcelona, but it's in the district Via de Gracia. And so it's supposed to be really good tourist spot, a lot kind of like hip, like the old streets, the old area, whatever. But yeah, so I bought that right before COVID. I literally bought that November 2019. Swear to God. Literally the month before COVID started breaking out in China. So, whew. Since then, I haven't rented it once. I got an offer a couple months ago for €400 a month. You gotta be kidding me. It's a 3-bedroom, 2-bath in a nice district with somewhat nice decoration. It's not brand new, but not bad. It's got a rock wall inside, okay? It's got a freaking rock wall. You can pay more than €400. So yeah, whatever though. So I expect to probably lose. I mean, it's just no point to sit there though. I guess I can wait it out, but the market is only expected to go up maybe 1.5% for the rest of this year, and then 2022 is only expected to go up like 3 or 5. So I'm like, whatever, man. Get out of the town. Just sell it. Stop, because every month you gotta you got some upkeep. You know what I mean? Forget that. I'll get something else that actually has positive cash flow. But yeah, things happen, you know. Things happen. But hey, if it wasn't for COVID, it would be doing all right. I'd probably be living there by now. Who knows? But maybe not. Yeah, I might do a video on it. I also got a property in Shanghai too. Flat, an apartment. Yep, so can't really do a very interesting video though, because I'm not in the States right now. But yeah, I mean, I could do like share my screen and just hunt for some good deals and do some analysis. That's something I can definitely do and show you guys that you can make money. But getting into a rental property, I can show you how to do it in Vegas. Actually, there's some good deals. We could be neighbors. That would be kind of weird. But yeah. Found this really sick property in Miami. On the water. Got a swimming pool. Ugh, too expensive though. Wait for the markets to crash, which as soon as they raise those interest rates, might crash. Okay. What's going on in the market? TQQQ down 2%. Bias flat. Tesla's down 6. It's quite a lot. Voxel's down 2.7, almost 3. 3% though. Things are slipping a little bit, but it's up and down. Even the financial sector is going down too. I mean, everything is basically going down. What is not though? Oil. Basically. Just oil. And oil stocks are doing really good. Huh. Well, anyways, guys, the Dow's up a little bit. S&P is flat. Nasdaq is down 1%. Semis are not doing so good, so it's going to be another one of those days, but that's okay. I'm going to be holding off. Buying something later. Sounds like an Airbnb play once tourism starts again. That's what I'm thinking. I'm kind of holding off. I don't want to get into a contract for a year. Also, I'm thinking about staying there a little bit once I do get back. Probably be the first place I stop by. Probably be Vegas a little bit. I don't know, maybe a year. Who knows? And maybe head out to Texas. Or maybe somewhere else. I don't know. Not on the house in BCE, but on real estate. Yeah, I can do that. We can totally do that. Yeah, I mean, if you have good credit and you want to get a mortgage right now I could show you a property right now that only costs $100,000 in Vegas. Could probably rent about $800 a month. If you mortgaged it, you're only gonna put $20,000 down though. You could get a positive cash flow. You know, you got to drop 20, 30 is better. You know, you could get an FHA, do 3.5, could be interesting. But on that, I would try to advantage of the system and do a multifamily. Triplex or Get an FHA on that, and then oof, that'll be good. You could even live in one of those units too, but that's the dream. The dream life. Anyways, guys, I'm gonna sign out. I don't really want to continue watching this. Who knows what's gonna happen? Whatever happens, happens. Shanghai was flat today. So we'll see what happens. We'll see what happens. But anyways, guys, once I get my Twitter back, then I guess I will update everybody. But if you are not already in the Discord, probably right now is a good time to join that, because who knows when the next time we can talk.